the chance of Bitcoin 10xing from here is really strong, right? Like these very, very high probability that Bitcoin 10x's from here over the next decade, or, could do even more than that, right? But let's just say that number, right? So we go from 70,000 to 700,000 in 10 years. I would say pretty good chance that we do that, right? I really think you can kind of take that to the bank. You have to ask yourself, what else is going to, how are my other assets going to do in 10 years, right? You buy a house. I think if you buy a house, you're lucky if that house doubles in 10 years right now from here.
Fred Krueger is a popular crypto analyst and Bitcoin maximalist with a PhD in math from Stanford University. Fred is a strong proponent of the Bitcoin power law, a theory that provides a mathematical description of Bitcoin's historical price trends, suggesting a deep correlation between time and price. As a mathematician, Fred believes the Bitcoin power law model is the best model for evaluating Bitcoin's price and adoption history, as well as predicting how high prices will go in the coming years. Fred has an ultra-bullish price prediction for Bitcoin, both in the short and long term. He expects the leading cryptocurrency to rise to at least $700,000 within the next decade. More importantly, Fred predicts that Bitcoin will massively outperform all other asset classes, including bonds, stocks, real estate, and even the constant debasement of the US dollar. The mathematician recently discussed his outlook on Bitcoin and the Bitcoin power law during an interview with Unchained. During the interview, Fred explains that the Bitcoin power law is a mathematical representation and proof of Bitcoin's superiority as a world-class asset. Fred's $700,000 prediction for Bitcoin is his base case. He believes the leading crypto asset could get much higher, especially as central banks continue to accrue massive debts and print money excessively to pay off those debts. During the interview, Fred also talks about the Bitcoin stock-to-flow model, a price prediction model popularized by anonymous analyst Plan B. Unlike the Bitcoin power law, Fred believes the stock-to-flow model has some shortcomings that make it a less superior model compared to the Bitcoin power law model. As we bring you clips from Fred's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can join the conversation by dropping your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I think the power law model is the best way to look at Bitcoin. And it's not just a model of the price, right? It's a model of everything that's around Bitcoin, right? And I think it will give you, anybody who spends a significant amount of time with this will give you a lot of conviction to hold Bitcoin over the long haul. It's like the best reason, because here's the way I would describe it. First of all, let's just look at adoption, right? Because if you're buying into Bitcoin, you fundamentally believe that more and more and more people are going to be using Bitcoin, right? And the power law, you can start looking at, okay, how many people have 1 million sats? Okay, well, you can look at those addresses, right? You can look at them and you're like, okay, there's 17 million people who have 1 million sats, 17 million addresses, and you can't say, well, people can have 2 addresses. Well, that's true, but the number of addresses is out there, right? It's out there on the block. Now you can look at that number leading up to today when you have 17 million of them, and you're like, oh my God, this thing goes up at a power of 2.5, right? Roughly. And it's very consistent. Like it's like if you put it in log space, it's like a line with a slope of 2.5. It's really consistent. Then you're like, okay, well, that's great, but that's not very much Bitcoin. What about if I took, 0.1 Bitcoin? You're like, okay, slope is now 2. Okay, what if I took 1 Bitcoin? Slope is now 1.4. And what if I took 10 Bitcoin? Well, the slope is now 0.7. So you have these power laws. Every single one of these things is a power law. And you're like, okay, well, that's not chance, right? Now you take those numbers and you plot those against Bitcoin, and you find it's a power law again, going negative power law, right? So now you got power laws of power laws, okay? So the adoption is clearly a bunch of power laws, right? It's just, there's no question. And by the way, this doesn't change whether the market's going up or down, right? It's just consistently adoption that's happening. Now you look at hash rate. Hash rate itself is a power law, right? Hash rate's going up at t to the power 12. And the correlation is amazingly good. It's like 98%, right? So hash rate is t to the power 12. Then you look at price. Well, price is actually a power law too. And as crazy as Bitcoin looks like, if you just look at it in linear terms, right? You're like, wow, this thing went up like crazy in 2017, right? Did a 20x. Then it crashed and went all the way down to 3,500. Then it spent 2 years like on the floor. Then in late 2020, it bounced from 10,000 to 60,000. Then it spent 1 year there, double top, puked, went down to 15,000, and just 12 months ago, kind of resuscitated. That vision. Most investors look at that and they're like, well, that's way too volatile for me, man. I do not want to have anything to do with that kind of, circus, right? But if you look at it on a long basis, like, oh my God, this thing is actually pretty steady, right? It's pretty steady. The drop from, even the drop from, in November 21 from, 69,000 to 15,000 fits the model. It's not even outside the model at all, because we were like 2x overvalued. We were sort of 2 standard deviations above trend line, and we went 1 standard deviation below trend line. And if you look at that, means and this is a very non-intuitive thing, but if you look at what a trend line looks like in 1 standard deviation in logarithmic terms, it means doubling, right? So 2 standard deviations above it means 4 times as much as trend line, and 1 standard deviation below means half. So 4 times to 1/2 is 8x, right? So that's an 80% drawdown.
During the interview, Fred talks about the Bitcoin stock-to-flow model and what he perceives as the model's weaknesses. According to the mathematician and Bitcoin maximalist, proponents of the stock-to-flow model erroneously believed that Bitcoin's price could not drop below the model's lower bound, which is why they were so shocked when it did. Fred also believes the model is too focused on Bitcoin's scarcity, and it overlooks other important fundamentals that make the cryptocurrency asset so superior. The fundamentals include Bitcoin's network effects and its status as the default cryptocurrency. Fred predicts that Bitcoin will maintain its superiority over all other cryptocurrencies. However, he adds that top cryptocurrencies like Ethereum and Solana will always have a place in the market, though not as a direct competition to Bitcoin, as many advocates of these cryptocurrencies believe. In Fred's words, things like Ethereum and Solana are just going to be substandard investments. They won't be as good as buying Bitcoin, but you can still make money with them. During the interview, the focus shifts back to the Bitcoin power law when the interviewer asks if the model is only a pattern or a mathematical certainty. Here is Fred's response.
And so are they patterns or are they mathematical law? They're patterns, but all these any kind of complex network, right, tends to exhibit these kind of very stable relationships, right? And animals are a complex network. You're a complex network of cells. You have trillions of cells that make up you, right? And cities are networks of people, infrastructure, plumbing, all this stuff. So when you have this complex network, they tend to exhibit power laws, and they tend to either scale up or down, right? I think these power laws are more than just mathematical, aberrations, right? I think there really is some very deep significance to how these things evolve, and I think it's probably likely, if I had to guess, that the Bitcoin power law will probably continue pretty much intact for the next 20 years, if I had to guess, right? Now, I think ultimately it sort of turns in more into an S curve. And, once we hit full Bitcoinization, then it's not going to grow at, 20% a year anymore. It'll grow at, 5% a year, which will be the growth of the economy, right? The growth of the world. But, we go from 40% a year to 20 to 30 to 20 to 10, 5, and that's kind of what a power law is. And, at some point, this sort of very smooth, almost exponential growth tails off, has an inflection point, and peaks off like that. But I think for all practical purposes, we're almost in an exponential phase right now. We're quasi-exponential. We're growing at 40% plus compounded right now. That's where Bitcoin is. The chance of Bitcoin 10xing from here is really strong, right? Like these very, very high probability that Bitcoin 10x's from here over the next decade, or, could do even more than that, right? But let's just say that number, right? So we go from 70,000 to 700,000 in 10 years. I would say pretty good chance that we do that, right? I really think you can kind of take that to the bank, and I think if you're planning on, you should have a 10-year time frame. If you're investing, you should have a longer term time frame. Just like, whether it's you're investing in Bitcoin or you're buying a house, I've owned this house for 10 years, I think you need to have a longer term time frame. And I think you have to ask yourself, what else is how are my other assets going to do in 10 years, right? You buy a house. I think if you buy a house, you're lucky if that house doubles in 10 years right now from here, I think if you buy stocks, I think they may double, but that would be kind of like my guess. Like I would not count on more than a double from here, because you're kind of getting them in at a very rich point, and it could go down, right? If you buy, put your money in just cash in the money market, you're probably going to make 30% after tax in 10 years. But again, now all these things you're going to have to discount relative to inflation, and there will be inflation, right? Now, how much inflation? We don't know. Right? It might be really bad. It might be 15% a year, right? Like it was in the 70s, right? It might be probably not going to be much lower than 7% a year, I would say, given kind of where we are. And so now you're in a position where your cash is going to be pretty much a guaranteed loser, right? Putting your money in the bank you're just going to have a lot less of it in 10 years, probably half of it. If you put your money in stocks, if you're lucky, you're going to break even, maybe. If you put your money in Bitcoin, probably going to 10x your money, even after tax and after inflation.
Undoubtedly, Bitcoin is a superior asset with a lot of potential both in the short and long term. In the short term, we can anticipate significant price gains before the cycle ends in 2025. Looking further ahead, the sky's the limit for Bitcoin prices, especially if macro and geopolitical conditions continue in this direction. However, it's crucial for investors to be prepared for the volatility, particularly during the 70 to 80% drawdowns of the bear market. Fred advises having adequate funds for emergencies outside your Bitcoin investments. This way, when unforeseen circumstances arise, you're not compelled to sell your Bitcoin, potentially hindering your chances of reaping substantial profits when prices skyrocket. Fred also emphasizes the importance of dollar cost averaging for people with a steady source of income. He explains that you shouldn't be dissuaded by higher Bitcoin prices. Don't wait to buy Bitcoin, but buy Bitcoin and wait. When the leading crypto asset increases by 10x, as Fred believes it would in a few years, he says it won't matter whether you bought a $60,000 or $100,000. Not only would you have increased your wealth, but you would also have protected yourself better against inflation and the constant debasement of fiat currencies. Please share your thoughts on Fred's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.